So, Bill, how are you looking at market inflation fears, tapering? What's your view?
The Motley Fool, we tend to have a very long-term view. I think a lot about some of the smartest investors I know who were macro people in 2014. One of the biggest messages they had was you need to lower your exposure to the market, and you need to lower your exposure to the highest priced components of the market because inflation is coming.
Mm-hmm.
And the amount of wealth that I feel was left on the table for people who were waiting for inflation because they were sure of it in 2014 and 2015 is somewhat remarkable. So to me, when I think about inflation and when I think about tapering, I look to what are the areas that are most inflation resistant. And companies that are profitable, that have pricing power, are the most resistant to inflation. Now, of course, we know for a fact that multiples for these companies may be impacted as the cost of capital goes up. I mean, that's how it goes. But if you are focused on the business itself and finding companies that have the ability to price along with inflation, you're going to be okay in the long run. And so that's really what we try to think about as we're picking stocks, not so much that macro, what happens when the Fed finally starts raising rates, because it's going to happen at some point.
So $10,000, where do you think I should put in? I mean,
I think that I think that in the US at least, that a lot of companies with pricing power, for the exact reason that we have just been talking about, there are what we call what have been called the FANG stocks internationally, but we here at the Motley Fool call Panama stocks.
Okay.
The Facebook, Apple, Netflix, Alphabet. I'm going to forget one. Microsoft and Apple.
Okay.
They're still rather cheap.
Okay.
Because of the amount of, the exact thing that we're talking about, for the same exact reason, they have pricing power. I can think of two. I mean, the first of which is just get the S&P 500 index fund. And the ticker here in the US is SPY. You can buy it on the market. If you think about, and then there's a global one, which is the ticker WTO.
Okay.
If you think about the S&P 500, it is one of the best money managers out there.
Okay.
500 companies.
Yeah.
They never, and it's only 500 companies, and they never sell down their winners. Their winners are allowed to run.
Mm-hmm.
The companies that get removed from the S&P 500 either get merged out or they have lost. And that's why it's so hard for so many professional managers to beat those indices. So if you're in the process of attempting to become, to build a portfolio, there are much worse strategies than to play what you might call index plus a few, where you buy the index, have that be your core. You don't need to be fancy about this.
Yeah.
Buy the S&P 500 index fund.